trusted source of economic and financial advice. Wall Street Week with Louis Rukeyser is made possible by Deloitte & Touche. Markets may rise or they may fall. Who helps companies prepare for the unpredictable? For business advisory services, the answer is the people of Deloitte & Touche. By Oppenheimer Funds. Skill, experience, strength. The strategy Oppenheimer Funds uses to achieve long-term performance. Oppenheimer Funds, the right way to invest. By A.G. Edwards. Committed professionals providing a full range of financial services and investment advice. A.G. Edwards. Trusted advice, exceptional service. And by the Federated Kaufman Fund. The experience of Kaufman, the resources of federated investors, managers of over $145 billion in assets. Produced Friday, August 10th. Guest host is Martin Zweig. Our panelists are Ralph Acampora, Francis Gannon, and Nick Sargent. Tonight's special guest is John W. Davidson, Chief Investment Officer, Circle Trust Company.
Good evening. I'm Marty Zweig, and this is Wall Street Week with Louis Rukeyser. Lou is on vacation, so I'll be your host tonight. Welcome. This week, a withering heat wave took siege of much of the country. Brutal temperatures broke long-standing triple-digit records and pressured even non-worriers to break a sweat. What, me worry? The rest of us tried to dodge the steam bath outside and in the economy and the markets with limited success. Even though recent census data report that the American standard of living increased in the 90s, sometimes you just can't help getting burned. Economically, worker productivity warmed up in the second quarter with help from technology, despite the near absence of growth. Announced job cuts rose to a record high last month, up 65%. Producer prices took a dip in July as wholesale gasoline costs slid the most they have since 1986. Inflation put in its best performance in 8 years, and import prices recorded their biggest drop in 8.5. Only Fellini might have appreciated an economy suffering from a midlife crisis. But then again, it may just be heat exhaustion, plain and simple. Tonight, we'll talk with a man who runs $8 billion and ask if he sees any relief ahead for the markets and for the economy. But first, let's see what was baked and what was broiled in Wall Street in the week just past. The Dow Jones Industrial Average gave up everything it had gained back last Friday on the lowest volume for a 5-day trading week in 2 months. For the week, the Dow slipped 96 points to close at 10,416. The broader averages all declined as well, and every one we track is now down on the year. The worst damage was incurred by NASDAQ, stringing together a 6-day slump, the longest since mid-June, to close at its lowest level in nearly 4 months. The elves were unchanged on the Dow. For the 6th week in a row, the halos go to those three who voted correctly neutral. That was 3 months ago, in which time the Dow has lost 3 3/4%. Neutral has been the correct vote on the Dow in 56 of the past 73 weeks. And again, there was neither change nor halos for those careworn, weather-beaten elves on the NASDAQ, which has lost more than 7% in 3 months. Treasuries follow the mercury upwards as yields fell to 4-month lows. The dollar fell against most major currencies, save the British pound. Gold posted its biggest gain in 2 months, while silver slid to an 8-year low. And if you're seeking a cool cave where you can hide from the heat, you might commiserate with Roger Yassin. The investment banker is suing for custody of his wine cellar, claiming his ex-wife Janet cut him off from the collection after they divorced 4 years ago. Now he's afraid the wine will spoil from neglect. Ralph Acampora, is there anything that can keep the market from spoiling any further?
Well, Marty, there's one saving grace, I think, in the market, and it's something I've been talking about for quite some time. It's the breadth of the market, which in English means the number of stocks that advance over declines. And actually, it's been doing very well for the last 6-7 months. So the majority of stocks are And when you look at the new high list, you can see that the majority of stocks are actually going up on the New York Stock Exchange.
So we have a lot of new highs, and we have good advanced decline numbers. What's been going down?
Well, yeah, of course, you still have a problem with technology, and then a couple of earnings surprises, and you'll have some blow-ups there. And the problem with the new high list is there's a lot of names that people never heard of before, or are not used to buying, like a Kmart or a Sears or a Bed Bath & Beyond. If you're willing to change from technology and to broaden out your buy list, I think you could do well.
Can you name a few things on your buy list?
Yeah, well, Sears Roebuck would be one of them. Forest Labs looks very, very good to us. Johnson & Johnson looks good. iPaper. I like some of the big stocks, along with the small and mid-cap.
No technology.
If you're so inclined to trade, I would look at a Dell, maybe an Intel, maybe in Sun Micro.
Okay. Nick Sargent, the producer prices came out today. They were down 9/10 on the headline number, but it was really all oil in there that did that. But people in Wall Street were talking about deflation. Is that a threat at all?
I don't think deflation, but there's no doubt that not just the U.S., the global economy is exceptionally weak, and we are seeing a general trend in falling commodity prices. So there's no doubt that we've seen the peak in inflation. It's coming down, and the good news is maybe gives the door open for more Fed easing.
Would all this be good for bonds?
Certainly, and bonds have been doing well. And I think that still we're going to see gradual reductions in the interest rates across the curve. Plus, some of the corporate bonds are going to be looking even more attractive because they have still relatively wide spreads.
Speaking of corporate bonds, junk bonds, I think, have been doing a little bit better, too. Do you like those?
Yes, on a long-term basis. I think that for, again, exceptionally wide spreads, a lot of bad news priced in, it's important to be diversified.
Okay. Frank Gannon, any light at the end of the tunnel here?
Well, I think there is light at the end of the tunnel, and I think, Marty, you have to focus on a couple of things. Consensus seems to think that lower energy prices, tax rebates, and even the tax break that we've been getting will help the economy recover and therefore help the market in general recover. I think that you're going to see the economy bottom in the beginning of the fourth quarter of this year, and earnings are going to get progressively better following a terrible second quarter.
Speaking of the rebates, did you get your $600 yet?
I did get my $600.
I don't know anybody who got their $600, and I'm waiting for this to stimulate the economy. But you think the tax cuts are going to help?
I think it'll definitely help. A combination of the two is very important.
So if it's going to help, what stocks might it help?
Well, I think in an economy like this, in a market like this, you have to remain diversified. So I've been focusing on stocks like Waste Management and Clear Channel Communications, and even Visteon, companies that are going to be benefiting from a turnaround in the overall economy.
And do you think large caps will do better than small caps, or?
Well, obviously, I'm a large cap manager. I'm biased, so I would have to tell you that a large cap.
That's why I asked you.
I would hope over time they would do better. But I think in this type of market, you want to focus on companies that have the best type of earnings growth, and that could be both mid and small cap.
Okay. Well, in any event, panelists, it's time now for another round of viewer questions. Ralph Akampura, Brian Ishikawa of Milani, I got that wrong, and I knew I would. Mililani, Hawaii, whatever, says he's heard that return on equity is a good way to measure how well a company is really doing. He's seen a lot of formulas that measure the company's ROE. Could you explain how that number is derived and why it's important in plain English?
Marty, return on equity is represented or expressed in a percentage. If you take the common equity, which is net worth, and divide it into the net income for, let's say, the second quarter, you have to do the formula after preferred dividends are taken out and before common stock dividends are taken out. If you do that, I think the shareholder gets a pretty good feel of what the company is doing with their money, and it's a good formula.
Okay. Hope you're right. Nick Sargent, Arnold M. Hilpert of Middleburg, Florida, wants an explanation of the economic report known as the Consumer Confidence Index. Could you please tell us how they make up that index and why it's important?
Sure, Marty. There are really two surveys that are taken, one by the University of Michigan, one by the Conference Board. Both surveys ask the respondents 5 questions. 2 about current conditions they face, 3 about how they see the future. So what they're doing is taking a score for each question on number of favorable versus worse responses. And then the composite is really just the average of those 5 scores. Now, why is it important? Consumer spending is 2/3 of the economy. When do you focus on this? Generally in unusual situations, stock market sell-offs, wars.
And are they How are they doing right now?
Right now, showing some sign of stabilizing after they had been coming down late last year, earlier this year.
So there's hope.
A little bit of hope.
A little bit. Okay. Frank Gannon, how would you respond to David Birchfield of Elmhurst, Illinois, who emails us as follows? With so much in the news about the scarcity of fresh water and predictions that water will be the oil of the future, are there any investment opportunities in this area?
Marty, population increases, pollution, and an increase in irrigated agriculture have all caused an enormous demand for fresh water on a global basis. In fact, some reports actually are saying that a full 1/5 of the world's population does not have access to fresh water. But from an investment standpoint, there are, I think, two ways to play it. One, from a utility standpoint, with names like American Water Works or Philadelphia Suburban Corporation. But I think the perhaps more exciting side of it would be the treatment companies, the processing companies, or people who make that type of equipment, like Tyco International or Flowserve.
Mm-hmm. Okay. Well, now, if you seek answers that are never watered down, irrigate our files with your juiciest questions. We always like to dip into the well here at Wall Street Week with Louis Rukeyser, Owings Mills, Maryland, 21117. And now a word from Louis Rukeyser.
Good evening, folks. I'm just here with a quick reminder of why our program will be a little short tonight. It's so the good folks at your local public television station can have a few extra minutes to ask you to give them your support. If you believe in the value of programs of the kind of quality we try to offer you each week, I hope you'll take this chance to respond generously to their appeal. The dividends will keep on coming.
Thanks, Lou. Now let's go over and meet tonight's special guest, John W. Davidson.
Hey, Marty.
Welcome, John.
Nice to be here.
John Davidson credits his career to his 81-year-old mom in St. Louis. An always active investor and longtime viewer of this program, she inspired John to look to finance after he got out of the Navy. Today, after 25 years in the investment business, he's the chief investment officer for Stamford, Connecticut-based Circle Trust Company. The firm was acquired in December 1999 by his former employer, Orbitex. His appearance tonight comes as an early birthday present since he's turning 55 next Thursday. John, what will it take to turn this market?
Well, all the secrets are out now. What can I say? I think what it really needs is for the economy to turn. And I think for that, we really need the consumer to lead this economy out.
What will make them turn? I mean, what will make the economy turn?
Well, I think a combination of things. I think you've got the tax rebate and the fact that it's not just a one-time rebate, but an ongoing lower withholding. You've got lower energy prices. And I think also with the lowering of interest rates we've had so far this year, that hasn't had an impact yet on businesses, but I think down the road it will. When the consumer starts spending, companies can start resupplying their inventories, and they can do so at a lower cost because their cost of borrowing, cost of capital is less.
How long does it usually take between the Fed loosening, you mentioned the lower rates, and when the economy finally picks up?
Usually there's a 6 to 9 to 12 months. Some people even talk about an 18-month lag before you really see the impact of the tax cuts.
So we're about 7 or 8 months into that.
We're 7, 8 months into that, and I think that probably by the fourth quarter we're going to see some of that.
And the tax rebate, would that act immediately, or is there a lag?
The tax rebate actually is starting last week, and I think 1/10 of the country is getting rebate each week. And I think as a result, we're going to slowly see that creep its way into the society. But I think the key is what the consumer does with it. We're not yet sure. We've seen some early signs. Walmart gave a report last week where they talked about consumers buying air conditioners. No question about why they did that this week. But televisions, DVD players, and other things. So I think that's really what's going to spur the economy.
Do you think we're in a recession?
You know, there's a question about that. People talk about the recession, and typical definition of recession is 2 consecutive quarters of negative GDP. We've not had one. Last quarter, the second quarter was up 0.7%. That may get revised, and it may even be negative. I think this quarter is really going to be transition. So technically, we're not in a recession, but we have recessionary layoffs each week that are over 400,000 strong, and I think those people probably feel it's a depression. But they still don't define recession. Manufacturing's in recession, but some of the other sectors aren't.
The Fed is going to meet on August 21st. Do you have any idea what they're going to do that day?
I think it's pretty clear at this point we're going to do 25 basis points. But maybe more important than the Fed's meeting on the 21st is the European Central Bank meeting on the 30th of August. The European Central Bank really has been reticent to join the fight against the global slowdown. And I think it's important that they join in on this. So what we're really looking